What if I told you the Federal Reserve has been planning for total economic collapse since March of 2020-3 ... And the only question left is whether they'll tell you before your savings become worthless. Not a theory, not speculation. A documented pattern hiding in plain sight. Emergency meetings behind closed doors. Classified briefings to select banks. Quiet preparations that only make sense if something catastrophic is coming. And while Jerome Powell stands at his podium, assuring you the economy is resilient, while Janet Yellen promises soft landings, while every financial news anchor repeats the word transitory like a prayer, the people who actually control the money are doing something very different. They're preparing for war, economic war. And you're the casualty they've already accepted. December 2025. Right now, this moment, the stock market hovers near record highs, unemployment numbers look decent on paper, GDP growth positive, inflation supposedly tamed. The narrative is recovery, resilience, American exceptionalism prevailing once again. But beneath that surface, beneath the carefully managed statistics and the coordinated messaging, something else is happening. Something they pray you won't notice until it's too late to matter. Let me show you what they're hiding in the shadows. Start eerie. March 10th, 2023. Silicon Valley Bank fails, not struggles. Not gets acquired, fails completely. The 16th largest bank in America, $209 billion in assets. Gone in 48 hours, the first real bank run in the smartphone era. Customers withdrawing $42 billion in a single day. Lines forming, panic spreading, and within 72 hours, Signature Bank collapses. Then First Republic teeters on the edge. Then Credit Suisse in Switzerland needs emergency rescue from the Swiss government. A contagion spreading faster than COVID, faster than anyone predicted, faster than the models said was possible. And Jerome Powell appears on television.com/measured professional. And he says the words that should have told you everything. The banking system is sound and resilient. Sound and resilient. While banks are literally imploding in real time, while depositors are pulling hundreds of billions from regional banks, while the FDIC is working weekends to prevent complete systemic failure, he looks directly into the camera and lies to you. Not because he's evil, but because telling you the truth would accelerate the collapse he's trying to contain. But here's what he didn't tell you that day. What he couldn't tell you. The bank failures weren't isolated incidents. They were canaries. The first visible symptoms of a disease that's been growing in the system for 15 years. A disease the Federal Reserve itself injected into the economy. And that disease is terminal. Think about what happened. Why did Silicon Valley Bank fail? They invested customer deposits in long-term treasury bonds, government bonds, the safest investment in the world, right? Backed by the full faith and credit of the United States. Except when interest rates rise, bond values fall. Basic finance. Everyone knows this. And when the Fed raised rates from 0 to 5.5% in 18 months, the fastest rate increase in history, those safe bonds lost 30 to 40% of their value. Paper losses, theoretical, not real, unless you have to sell them. Unless depositors want their money back. Unless you're facing a bank run and need cash immediately, then those paper losses become very real. Catastrophically real. Silicon Valley Bank wasn't reckless. They followed the playbook, invested in government bonds, exactly what banks are supposed to do with excess deposits, and it destroyed them because the Federal Reserve changed the rules mid-game, raised rates so fast that the entire banking system's balance sheet went underwater. Not just SVB, not just Signature, every bank. The FDIC estimates that American banks are sitting on $620 billion in unrealized losses. $620 billion. That's not a number. That's an existential threat hidden behind accounting rules that let them pretend those losses do UNT exist as long as they do UNT sell. But what happens when they have to sell? When commercial real estate loans default? When the next crisis forces liquidation? When depositors lose confidence and start withdrawing? Then those losses become real and banks start failing. Not one or two, dozens, maybe hundreds. And the FDIC doesn't have enough money to cover that. Not even close. The deposit insurance fund has 128 billion to cover 620 billion in losses, plus trillions in total deposits. The math doesn't work, which means when the next wave hits, when the dominoes really start falling, the only option is Federal Reserve intervention. Again, more bailouts, more printed money, more destruction of currency to save institutions that should fail. Would you trust a doctor who caused your disease and now promises to cure it with more of the same medicine? But that's just banking. That's just the surface. The real catastrophe, the thing that keeps central bankers awake at night, is sovereign debt, government debt. The debt that grows exponentially while everyone pretends it's manageable. $37 trillion. The United States national debt, 37 trillion. Write that out. 37 followed by 12 zeros. A number so large it becomes abstract, meaningless. Except it's not meaningless. It's a bomb with a timer, and that timer is accelerating. Here's what they don't tell you. The interest payments alone are approaching $2 trillion per year. $2 trillion just to service the debt, not to pay it down, not to reduce it, just to pay the interest on money already borrowed. And that number is rising every month as old debt at low rates gets refinanced at higher rates. By 2026, interest payments will exceed defense spending. By 2027, they'll exceed Medicare. By 2028, they might exceed all discretionary spending combined. How do you pay interest that large? You borrow more, issue more bonds, print more money, hope someone keeps buying, hope China keeps accepting dollars, hope Japan doesn't dump their treasury holdings, hope the world maintains faith in a currency backed by nothing but the promise to print more of it. But what happens when that faith breaks? When creditors stop lending? When the auction fails and not enough buyers show up for treasury bonds? Then interest rates spike, debt payments explode, and the government faces a choice. Default explicitly and admit bankruptcy, or default implicitly through inflation. Print enough money to pay the debt and destroy the currency in the process. Which do you think they'll choose? The option that admits failure, or the option that hides failure behind rising prices and calls it economic policy? They've already chosen. They chose in 2008, they chose in 2020, and they'll choose the same in 2025. Print, inflate, destroy the currency, transfer wealth from savers to debtors, from the middle class to the government and the banks. It's not a conspiracy. It's policy documented, defended, celebrated, saving the economy. But saving which economy? Yours or theirs? If you're starting to see the pattern, if the comfortable narrative is cracking, subscribe now, because what comes next will shatter everything you thought you knew about money and power. Let's go deeper. 2008, financial crisis. The Fed's response: drop rates to zero. Print $4 trillion through quantitative easing, buy mortgage-backed securities, buy treasury bonds, inject liquidity, save the banks, and it worked. Sort of market stabilized. The banking system survived, but the underlying problems, the toxic derivatives, the moral hazard, the too big to fail institutions, none of that was fixed. Just papered over with freshly printed currency and a promise that next time would be different. But there was a cost. When you suppress interest rates to 0.4 over a decade, you create distortions. Companies that should fail stay alive on cheap credit. Zombie companies, unprofitable but still operating because they can keep refinancing debt. Real estate prices inflate beyond any connection to income or rent. Stock markets rally not on earnings but on the promise of continued low rates. Everything becomes a bubble simultaneously. Because when money is free, speculation becomes inevitable. Malinvestment becomes systemic. And bubbles become the economy. The Fed knew this, had to know this. Ben Bernanke literally wrote his doctoral thesis on the Great Depression. Janet Yellen chaired the Fed. Jerome Powell ran the show. These aren't stupid people. They understand monetary policy. They understand that artificially suppressing rates creates distortions. But they did it anyway for 14 years because the alternative was facing consequences, admitting that recovery was fake, letting bad debt default, allowing creative destruction, accepting short-term pain for long-term health. But politicians don't get reelected during recessions. Central bankers don't get celebrated for causing unemployment. So they chose the path of least resistance. Keep rates low, keep printing, keep inflating assets, and hope the bill comes due after they've retired. Then came COVID 2020. The economy shuts down. Unemployment spikes to 14.7%, highest since the Great Depression. Markets crashed 35% in a month. Panic everywhere. And the Fed's response, the same playbook, but exponentially bigger. They don't just drop rates to zero. They print $9 trillion in 2 years. 9 trillion. More than double what they printed in the entire decade after 2008. They buy everything. Corporate bonds, municipal bonds, even junk bonds through special facilities. Whatever it takes to keep asset prices from collapsing. And it worked. Markets recovered. Housing prices soared. Bitcoin at 69,000. NFTs sold for millions. Everyone felt rich. Pandemic savings ballooned. Stimulus checks arrived. Free money for everyone. The greatest economic boom in history. Except it wasn't real. It was inflation. Monetary inflation that hadn't yet shown up in consumer prices. But it was coming. Hajirue komi. Because you can't print 40% of all dollars ever created in 2 years without consequences. By 2021, inflation started appearing first in used cars, then housing, then food, then energy, then everything. The Fed called it transitory, a temporary supply chain issue, nothing to worry about, just wait it out. But by 2022, inflation hit 9.1%, highest in 40 years. Your grocery bill doubled. Gas hit $6 a gallon in some places. Rent became unaffordable. The dollar in your pocket lost purchasing power every single month, while Jerome Powell insisted it was under control. And then they had no choice. They had to raise rates, had to fight the inflation they created by printing too much money. So they raised rates faster than ever, from 0 to 5.5% in 18 months. And that's when the system started breaking. That's when Silicon Valley Bank failed. That's when the banking crisis began. That's when commercial real estate started collapsing. That's when the debt payments started exploding. That's when the doom loop became visible. Do you see the trap? They printed money to save the economy, which created inflation, which forced them to raise rates, which broke the banks, which required more intervention, more bailouts, more printed money, which creates more inflation, which requires higher rates, which breaks more things, round and round. A feedback loop with only one ending. Complete currency collapse, and they know it. They have to know it, because anyone who understands monetary economics can see it coming. The question isn't if, it's when. And how bad. But here's what makes this different from every previous crisis. This time, there's an alternative. This time, the world isn't trapped in the dollar system. This time, countries have options. 2023, the BRICS nations announced they're developing a new currency. Brazil, Russia, India, China, South Africa, Blue Saudi Arabian, YNAYAPE, Ethiopian Iran, Argentina docens, more applying. Countries representing half the world's population, 45% of global GDP, and they're creating a currency backed by commodities, by gold, by real assets instead of promises, an alternative to the dollar, an escape from American monetary policy, from sanctions, from surveillance, from control. And if it succeeds, if even 20% of global trade shifts away from dollars, if oil starts trading in yuan or this new BRICS currency, if countries dump their treasury holdings and buy alternatives, then demand for dollars drops. And when demand drops, value drops. And the Fed loses its superpower, the ability to print money and export inflation to the rest of the world. The exorbitant privilege that's allowed America to consume more than it produces for decades. Gone. That's the real crisis. Not recession. Not even depression. The end of dollar hegemony, the loss of reserve currency status. And once that happens, once the world stops accepting dollars as valuable, the 37 trillion in debt becomes unpayable. The printing becomes hyperinflation. And no amount of Fed intervention can stop it because the problem isn't domestic anymore. It's global. And you can't print your way out when the world refuses to accept what you're printing. Would you bet your life savings on the dollar maintaining global dominance for the next 20 years? Because that's what you're doing, whether you know it or not. Your retirement account, your savings, your paycheck, all denominated in dollars, all assuming the dollar maintains value, all betting that somehow this time will be different, that America will defy economic gravity, that the rules that destroyed every other currency in history won't apply to us. But history says otherwise. Every reserve currency eventually falls. The Portuguese real, the Spanish dollar, the Dutch guilder, the British pound. Every single one dominated global trade for a century or more. Every single one seemed permanent, inevitable, too important to fail, and every single one collapsed anyway. Not because of war, not because of invasion, because of debt, because of monetary because governments printed money to pay bills they couldn't afford. And eventually, the world stopped accepting it as valuable. The average lifespan of a reserve currency is 9 to 4 years. The dollar has been the reserve currency since 1944. 81 years. We're approaching the historical limit, and the signs of decline are everywhere. China settling oil trades in yuan, Saudi Arabia accepting yuan for oil, India buying Russian oil in rupees, countries building payment systems that bypass SWIFT, central banks buying gold at the fastest rate since The world is quietly, systematically, deliberately moving away from dollar dependence. And the Fed can see it happening, can track every trade, every currency swap, every gold purchase, and they're powerless to stop it. So what do? They maintain the narrative, control the message, manage expectations, tell you everything is fine while preparing for a catastrophe, because that's all they can do. Admit defeat, and the collapse accelerates. Maintain confidence, and maybe, just maybe, they buy enough time for it to become someone else's problem. But whose problem? Yours, your children's, your retirement, your savings, your future. That's who pays when central banks run out of options. That's who suffers when currencies collapse. Not the bankers, not the politicians, not the billionaires who own assets in gold and real estate in multiple countries. They'll be fine. They always are. It's the middle class that gets destroyed. The people who did everything right, who worked hard, who saved diligently, who trusted the system, they're the ones who lose everything when the currency they saved in becomes worthless. And the Fed knows this, has to know this, has probably wargamed the scenarios, modeled the outcomes, calculated the casualties, and decided that maintaining the illusion as long as possible is better than admitting the truth. That the emperor has no clothes, that the system is broken, that the dollar's dominance is ending, that your savings are already worth less than you think and will be worth even less tomorrow. Think about what's already happened just since 2020. Your purchasing power has declined 30 to 40%, depending on what you buy. That beach house you could almost afford, now impossible. That retirement you planned for now requires twice as much money. That college fund you're building might cover 2 years instead of 4. Everything costs more. Not because things got better, because your money got worse, because they printed trillions and called it stimulus, because they prioritized asset prices over your purchasing power, because the system chose winners and you weren't one of them. But they can't say that. Can't admit that inflation is a policy choice, that it's a tax on savings, that it's a transfer from people who hold cash to people who hold assets, that it's designed to help debtors at the expense of creditors, that the government is the biggest debtor of all, that inflation helps them pay debt with cheaper dollars while destroying your savings in the process. They can't say it because saying it admits the game is rigged, admits that your hard work is being taxed through currency, admits that the system isn't designed to help you build wealth. It's designed to extract it. And once enough people understand that, once the masses realize they're being systematically robbed through monetary policy, confidence breaks, bank runs become inevitable, currency rejection follows, and the system collapses under the weight of its own corruption. That's why they lie. That's why Powell stands at his podium and reads from prepared statements. That's why every word is carefully chosen and vetted by lawyers. That's why he never answers the real questions, because the truth would end the system, would trigger the crisis they're desperately trying to prevent. So they choose the comfortable lie, the reassuring platitude, the technical jargon that sounds smart but says nothing, and they pray it holds together long enough. But it won't. It can't, because the mathematics don't work. The debt is too large. The demographics too unfavorable, the alternatives too attractive. The world too informed. You can't maintain a Ponzi scheme once everyone knows it's a Ponzi scheme. And the dollar system is the greatest Ponzi scheme ever created, backed by nothing but the promise to print more, sustained only by forced participation and the lack of alternatives. And now there are alternatives, and participation is becoming voluntary. And the whole thing is starting to crack. Look at the signals. Really look. Commercial real estate is collapsing. Office buildings with 50% less than 3 years ago. Nobody wants office space. Remote work changed everything. And banks hold the debt. $3 trillion in commercial real estate loans. Much of it refinancing at rates 3 times higher than the original loans. Default rates climbing. Banks tightening lending. Property values falling. A death spiral that's just beginning. And when those loans default, when banks have to recognize those losses, when the next wave of failure starts, what then? More intervention. More bailouts, more guarantees, more destruction of the currency to save institutions that should fail, because that's the only tool they have. Print and pray, inflate and hope. Kick the can and make it someone else's problem. But the road is ended. The can can't be kicked anymore. And everyone knows it, except the people who are supposed to be watching CNBC and trusting the experts and believing the narrative. Here's what the smart money's doing. The billionaires, the hedge funds, the family offices that manage generational wealth. They're diversifying out of dollars, buying gold, buying art, buying real estate in multiple countries, opening accounts in Singapore, moving assets to Switzerland, acquiring Bitcoin, building bunkers in New Zealand. Not because they're paranoid, because they have information you don't, because they understand what's coming, because they can see the writing on the wall that the Fed keeps trying to paint over. Warren Buffett is sitting on $189 billion in cash. $189 billion. Why? Because he can't find anything worth buying, because valuations are insane, because the market is disconnected from fundamentals, because he's waiting for the crash. And when panic sets in, when assets become cheap, he'll buy everything. Again, just like he did in 2008. Just like the wealthy always do, they have the luxury of patience, the privilege of cash, the advantage of information. While you're told to stay invested, $2 cost average, to trust the long term, they're preparing for the collapse and positioning to profit from it. Is that the game you want to keep playing, where the rules are designed to ensure you lose? But here's the truly terrifying part. Even if you see it coming, even if you understand what's happening, even if you want to protect yourself, your options are limited because the system is designed to trap you. Your retirement account locked in, can't access it without penalties. Your mortgage forces you to stay. Your job ties you to a location. Your dollars losing value every day, but you need them for immediate expenses. You're stuck in a system that's collapsing around you with limited ability to escape, and they know that. They're counting on it, counting on your inability to move quickly, to restructure, to protect yourself. Because if everyone tried to exit at once, if everyone sold dollars and bought alternatives, if everyone pulled deposits and bought gold, this system would collapse immediately. So they need you trapped. need you docile, need you believing the comfortable lie that everything will be fine if you just stay calm and trust the process. But what if the process is broken? What if the people running it have no idea how to fix it? What if there is no fix? What if we read just watching the slow motion collapse of the most successful empire in history, and nobody wants to admit it because admitting it makes it worse? That's where we are. 2025, the silent collapse, not announced on television, not declared in headlines, not admitted by anyone in power, but real nonetheless, happening in every price increase, every interest rate decision, every bank failure, every country that moves away from the dollar, every gold purchase, every Bitcoin transaction, every sign that the old order is dying and something new is being born. And that birth is going to be violent. The Federal Reserve knows, the Treasury knows, the banks know, the billionaires know. They're not telling you, because telling you accelerates the timeline, makes the landing harder, turns a manageable crisis into complete chaos. So they maintain the lie, control the narrative, and hope they can thread an impossible needle, raise rates enough to control inflation without breaking the economy, reduce debt without default, maintain dollar dominance even as the world builds alternatives. It's impossible, mathematically impossible, economically impossible, but they have to pretend it's possible, have to maintain confidence. Because confidence is all that's holding it together. And when that confidence breaks, when the Mazas realize what the smart money already knows, when the bank runs start and the currency rejection accelerates and the system reveals itself as the house of cards it always was, that's when the silent collapse becomes loud. That's when your comfortable assumptions shatter. That S, when you realize that everything you were told about financial security was a fairy tale told by people who profit from your ignorance. But you're not ignorant anymore. You're seeing clearly. The question is what you'll do with that sight. Will you prepare? Will you protect yourself and your family? Will you make hard decisions now to avoid worse outcomes later? Or will you hope it's not as bad as it seems? Hope someone fixes it. Hope you're one of the lucky ones who somehow escapes unscathed. Because hope isn't a strategy. And luck runs out. And the collapse doesn't care about your plans or your dreams or your belief in American It's coming. The mathematics guarantee it. The only variables are timing and severity. And those variables are determined by how long they can maintain the illusion, how long you keep believing, how long confidence holds. The silent collapse of 2025. Not a future threat, a present reality happening now, all around you, in ways you're trained not to see, through mechanisms you're taught not to question, by people you're told to trust. And the longer you trust them, the longer you believe. The worse it's going to be when the illusion finally breaks and reality comes crashing through. They know, they've always known. The question is whether you'll figure it out in time to do something about it, or whether you'll be another casualty in the greatest wealth transfer in human history. Another victim who did everything right, but played a game rigged against them from the start. If this shattered your worldview, if you're seeing things you can't unsee, you need to watch what comes next, because the collapse is just the beginning. What they're planning to replace the dollar with is even more terrifying. Central bank digital currencies, social credit systems, complete transaction control, a world where every dollar you spend is monitored, approved, and possibly denied based on your compliance. Subscribe, turn on notifications, because the next episode reveals the endgame. The digital prison they're building while you're distracted by inflation and bank failures. It's all connected. And you need to see the full picture before the walls close in. See you on the other side. If you're ready for the truth,